Laura, please start.
Thank you. Usually I'm going to Joe Cioli for advice on the stock market, but today I'm going to take you into this chart. I talked with a lot of different sources, and they really gave us this sort of under the hood look at Bank of America and these deliberations. So she's really trying to get, partly the revenue picture, but also really the cost side. Historically, Jefferies has always been more of a debt trading shop, and that's still true, but they have used equities over time to sort of fill in the gap when fixed income was not doing as well. Tony, we haven't had a chance to ask you about Wells Fargo yet, but I know that's a name that you've been involved in for quite a number of years. And we've got the shareholder meeting coming up on April 25th, next Tuesday. What kind of things do you expect at this meeting? I mean, there's a proxy vote. Some of the advisors have recommended that most of the board members should be voted out.
This was not your typical shareholder meeting for Wells Fargo.
Right, Scarlett. This was a really long meeting, very different for Wells Fargo. Normally their meetings run 45 minutes, maybe an hour, and this one was about 3 hours long. So that gave a lot of opportunity for small shareholders, especially to really break in and say, look, this is what I'd like to talk about, and here, you need to hear it, board members. The analysts that we had looked at before had an estimate for 1.8, so that is definitely better there. And I'd be interested if FICC has been rising that much, probably overall trading with the equities, even if that weighed down a bit, is probably up too. When we were looking through these different filings, I was talking with different people, and Goldman Sachs showed up on this S1 filing, just in this great size. And most of the people, most of the investors that were involved in this situation were just so surprised that they were that big. They ended up with $200 million, we found, before the company came out of bankruptcy. This is a big deal for banks. The JP Morgans of the world, the Bank of Americas, those two have both signed on to finance the loan that's underpinning this deal. They call it a bridge loan. So it's $40 billion. And I think the other thing that when we talk to these different traders, what they're telling me is, look, it feels worse because what we had coming into this quarter in the momentum from 1Q, 4Q, and 3Q before that was all up, up, up. And now we suddenly see, things are not so great. Goldman has always been this bank that, is very institutional. We really deal with the best of the best clients. Whether that is the sophisticated investor who's trading these arcane debt securities, if you think back to Abacus, things like that.
So what was behind that 25% rise?
Yeah, it's a really hefty pay package that the board gave to Brian Moynihan. $20 million is nothing to sniff at. Right, and I think Anne brings up a great point because, in that situation when you felt like the bank has wronged you in this way, and, it sounds like your allegations are a fraud, really, because they're moving money from one account to another. I can certainly see why you wouldn't want to go into the bank and try to work it out there. And this is actually my favorite chart of the last 2 weeks because it just mirrors exactly all the conversations that I've been having with bankers and traders and hedge fund analysts who are just saying, look, it's risk on, baby, right now. I got to talk to Mary Jo White yesterday, which, of course, she had led the SEC for a time. She's now doing private practice in law. And she said, that's a strength for Betsy Duke to have that regulatory background as we go through changes, but also because she really can speak then to investors and her fellow board members.
How are they going to make these payments?
Yeah, you've hit it on the head. They pretty much are moving from one place to another. So they have certain accounts where money goes in, taxes for rum, for example, or fuel taxes, different kinds of boxes, as we can say, that should go to fund certain kinds of bond payments. And what they're doing is they're saying, look, the ones that aren't constitutionally required, that we can move money from, we will. And you asked him about fixed income sustainability, and I'm just wondering, if you felt like what he answered was actually sort of what you needed. Each bar represents some of the 4 biggest banks in the U.S. The blue one, interestingly enough, is Wells Fargo, and as we know, that bank has dealt with a lot of scandal. Are certain banks really following these rules and really attesting that they are cracking down? Or are some of them just saying, look, we have rules in place, but maybe this trading desk doesn't actually enforce it? And I do think that what we found is there is this sort of cacophony of things happening where that some places are looking at it, some places really are not as aware as they should be. I'm Laura Keller, Bloomberg News in New York.